Hi everyone, my name's Alex and I'll be taking you through Ecosoc's market recap for week 7. Chinese stocks are this week's market mover after the CSI 300 index of mainland shares rose by 4.3% this week. The Hang Seng China Enterprises Index jumped 13% at its recent close, which represents a recapture of almost half of the year's losses and is the largest climb since 2008. The upswing follows an announcement by the government that it will ease regulatory crackdowns that previously hindered the market. This represents a vow to stabilize financial markets, particularly through support for property and tech companies. China's banking financial regulator has reciprocated the sentiment by announcing its support for insurance companies to increase investment in the stock market. The synchronous statements of confidence come in response to the expectation for the Federal Reserve to raise interest rates, which would risk capital outflow from China. The announcements have clearly instilled confidence in investors and are expected to boost growth within the Chinese economy. Bad news for the renewable energy sector this week in the form of a restrictive legal precedent. The Supreme Court of Victoria issued an injunction against Victorian Bald Hills wind farm after upholding noise complaints by neighbours. The injunction will require Bald Hills to take necessary measures to abate emitting loud noises at night, which will likely involve switching off operations during certain hours. The farm was also ordered to pay over $260,000 in damages to the aggrieved neighbours. One of Australia's biggest renewable energy investors, Alinta, says the decision could set a precedent with chilling effects on the country's transition away from fossil fuels. The precedent will test investors' willingness to invest valuable capital into wind farms more generally. As for market and macro trends, the Dow Jones, S&P 500 and Nasdaq are all up this week after investors have bought the dip. The ASX 200 lifted for the fourth day in a row to a 2-month high thanks to higher iron ore prices and a bounce back on Wall Street. The rise is largely attributed to a boom in mining stocks, with utilities, real estate and oil comprising of 7 of 11 sectors that rose this week. The Australian dollar is also at a near 5-month high, purchasing 75.2 US cents as a result of higher commodity prices. The RBA is yet to lift the cash rate from 0.1%, despite inflation being outside the target band at 3.5%, and unemployment is still looking good below Nauru at 4.2%. After a month of being shut down, Russian stocks have seen a major turnaround as the market reopened for limited trading this week. When President Vladimir Putin initially invaded the Ukraine in February, the Russian market fell by more than 30% in one day, and as a result, trading was then suspended. But this week, upon reopening, the Russian index climbed by more than 10%, with large gains made in energy and mining stocks. However, the move didn't come without criticism, with the US pointing out that this model of limited trading was not sustainable. In other news, Russia is finding itself short on US foreign reserves, which it requires to repay its debt to the US. With a debt of over 500 million USD due within a fortnight, there is certainly uncertainty as to whether Russia will avoid a major sovereign debt default. And our last story is a rather light-hearted one. In legal economic news, there is good news on the horizon for ice cream lovers. In proceedings led by the Australian Competition and Consumer Commission, Peters Ice Cream has been ordered to pay a $12 million penalty for anti-competitive exclusive dealing. The federal court found that by acquiring distribution services from PFD Food Services on the condition that it would not sell or distribute competitors' single-serve ice cream, Peters had engaged in exclusive dealing. As a result of the decision promoting healthy competition, consumers can now hope to see lower prices of our favourite treats in the future. That's all for this week's market recap. Be sure to look out for the budget this Tuesday, 29th of March, and we will be back next week to break it down. Thanks for listening and have a good week.